Hey everyone, welcome back to the channel. Today's video is going to be on Palantir because that stock is on absolute fire recently. Over the past week, it's up 37%. And over the past year, it's up over 400%. That's insane. Disclosure, I've been a shareholder since 2021, and my position is closing in on a six-figure valuation. So the question at the top of my mind is the company getting over its skis? Is it time to sell? Remember, intelligent investors sell the news. They don't buy it. And this company is approaching meme-like valuations. I mean, its PE ratio is 519 right now, and its price-to-sales ratio is 95.26. And there's really not anywhere on the internet where you can get a sober view of this company. It's extremely polarized. YouTube is ripe with these mega bulls who will lose their mind if you have any idea outside of Palantir to the moon. And on the opposite side, straight from my own school, value investing, they'll largely write off this company and completely ignore the growth prospects or the underlying technology. We can be a rather curmudgeonly group of people from time to time, and I say that with a lot of love in my heart. It's a better way to be. You want to be cautious. But first, if this is our first time meeting, hey, I'm David. I'm the founder of Flank Investing. We're on a mission to make intelligent investing more mainstream. I'll talk more about how we're doing that at the end of this video, because I'm not shy about this. We're building something that I think could change the world. And if you're not interested in hearing about it, I'll be sure to timestamp it appropriately, because you did click on this video to learn about Palantir, not learn about my startup. But if this is your first introduction to Palantir, then I recommend you check out our other video, where we gave more of an introduction to what the company actually does. Because in the world of Buffett-style investing, understanding the business is the very first and the most important step. Anyway, my thesis back in 2021 was that you had this really great software company that was starting to break into the commercial space on a large scale. The Foundry platform has been around since the 2010s, but it was really starting to kick off in 21. And that thesis proved true, but I was really early. And now we're seeing commercial usage grow like wildfire. In fact, it's up 43% year over year. CEO Alex Karp said in their earnings call that they're entering a new phase of growth. But the bears do have a good point. Here's a Jefferies analyst on CNBC.
Look, they've had a great fundamentals. I think this is a question of valuation. And again, you'd have to grow 5 years in a row at 50% and the stock would still trade at 15 times revenue. So I'm not sitting here attacking the fundamentals. The fundamentals are great. Ours is largely focused on the stock and looking at what's happened to investors in the last 20 years. When you chase things at 50 times revenue, it doesn't end well.
And he does have a really good point. This company is really, really highly valued right now. Perhaps overvalued. This company needs to continue to grow. It is entirely dependent on its growth in order to support that valuation. But that also means that a lot of the upside might be already baked into the stock price. But that interview also included analyst Dan Ives, who's a Palantir bull, and this is his belief.
The bears, they were bearish at $10, hated 40, and despised it at 100, right? And I think they can see AI in the spreadsheets. When we do the checks that we've done for Palantir, I think it's the next Oracle, it's the next Salesforce. I think this is a company, when it comes to AI revolution, this is really front and center is what's going to be one of the huge beneficiaries there.
Do they need to pull the marketing lever here? Do they need to build out that team, or it's not necessary?
I think the scary thing is, with no direct sales force and basically more inbound, this is what they've done. In terms of what these types of numbers, you start to look out the next 3, 4, 5 years. I mean, I think this is ultimately, this could be a $1 trillion market cap.
And I actually agree with both of these guys. And in my opinion, that's the definition of intelligence, being able to hold multiple conflicting ideas in your head and then make a determination of it. But the bears do make a really good point. If we look at the margins of the business, their last full year reporting, they were at 5.3%. We are seeing margin expansion, and that has continued in the recent quarters. In fact, their operating margin from their September quarter was 13.79%. Those are really good operating margins for a startup SaaS company, but they were founded in 2003. Then again, age is just a number, and they are kind of growing like a startup. In fact, in software investing, there's a really fun metric that I like to look at called the Rule of 40. In fact, McKinsey calls it the purest test of a SaaS company's management team. And so to calculate the Rule of 40, you take the year-over-year revenue growth and then add in the profit margin. Normally, Wall Street uses EBITDA margin, but both Buffett and myself really hate EBITDA margin and EBITDA in general. Seriously, fuck EBITDA and quadruple fuck adjusted EBITDA. And so we'll use the operating margin because that's more intellectually honest. But before we calculate that, I do want to point out something that I found in their quarterly report that's a little suspect. They claim that cash from operations grew to 56% margin. And that's a weird line item. I think they're talking about cash flow from operations, and they put in a little bit of a weird spot in this financial summary. It almost makes it look like they're trying to make you think that it's operating income. But if we actually go into what they're reporting outside of the highlights, we can see that their income from operations was 310 million over 2.8 billion. So if we take in their real operating margin at 10% and their revenue growth rate was 36% year over year, then they still crush the Rule of 40, even with my added conservative nature of using operating margin instead of EBITDA margin. So yeah, I really like the direction the business is heading, but I'm really going to be watching for commercial sector growth. That's really what my thesis is depending on. And they gave a little bit of guidance at the end of this report. They said for full year 25, they're expecting revenue to be somewhere at 3.7 billion, and they're expecting a growth rate at US commercial at 54%. So apparently I'm not the only one looking at commercial growth rate, and I think that makes sense. So yeah, this is really highly valued right now, and I wouldn't take a position if you don't already own it. The legendary investor Howard Marks recently wrote in a letter to his clients 3 rules that he learned early in his career that made him a great investor. And those 3 rules are, it's not what you buy, it's what you pay that counts. Remember, cost and value are 2 very different things. Right now, the stock is very highly valued. The market is expecting it to grow. And then second, he said, good investing doesn't come from buying good things, but from buying things well. And then third, he wrote, there's no asset so good that it can't become overpriced and thus dangerous. And there are few assets so bad that they can't get cheap enough to be a bargain. And I think that's really the operative word here. Dangerous. I wouldn't buy Palantir right now if I didn't already own it, because at a 500 PE ratio, that's really dangerous. You need to know something that other people do not about this business. Wall Street is really expecting this thing to continue to grow like wildfire. And I think that it's capable of doing that. But I also think a lot of the upside's already captured. So I'm going to hold for now, but I'm really going to be watching every quarter to see what US commercial growth's doing. And if it starts to fall, I will sell. And I will let you know if I do sell. All right, that's the end of the Palantir portion of this video. As I promised, I wanted to give you a quick update on what I'm working on at Flank. Like I said at the top of this video, my thesis was right, but it was early. The only reason I was able to hold it through that period, and it got ugly, but I stuck to my guns, and I was able to do that because I trusted my research. The only way I was able to do this is because I really did my homework. I understood this company really well. I knew all of their products that they had available. I knew which products they were investing heavily in. I knew people who worked at the company, and I talked to them about it. And I also really respected those people who worked at the company. They were really smart, and they worked really hard. They were going to the office at like 8 o'clock at night. The one thing I really wish I had back then was a better system of record so I could post what my thesis was back then. And that's one of the things Flank can do now. I actually just posted my updated thesis on Flank today. But I want to talk more about the core of what we're doing and really what the dream of Flank is. Flank is not somewhere where you'll go to get stock tips or buy recommendations. There really isn't any value in getting other people's recommendations. It's better to think of Flank like it's a gym membership. You won't become a better investor by following other people's stock tips or watching YouTube videos and then following people into stocks based off of what you see in a YouTube video. Just like you wouldn't get any stronger if you listened to fitness YouTubers. You actually have to go to the gym and pick up weights. That's the only way you'll get stronger. But it is helpful to watch these videos. I watch tons of investing content on YouTube, and it's not just because I make that type of content. And it's because it helps inspire you to get other ideas or take a different approach when you're studying something. I love many of the investing creators on YouTube. I really do. I have a lot of respect for a lot of them. Seeking Alpha is really good, but there's so many traders on there that all the technical analysis really washes out the fundamental analysis, which is what Buffett-style investing is all about. And I really do think it's the only way individual investors should be investing. So we're building a place where people can study businesses together. Perhaps you'll get inspired by someone else's analysis, and you'll go research the company yourself. And when you do that research, perhaps you'll agree or disagree with the original poster, or you'll point out a blind spot for him. And I really like the gym analogy of Flank, because just like in the 1970s, bodybuilders made workout culture cool, and in the 1980s, Nike made running cool. It's weird to say now, but the dream of Flank is to make intelligent investing cool. And it's because learning how to study companies can really give you an advantage, not only just from making money from investment returns, although in the long run, you can make a lot of money. I've made hundreds of thousands of dollars at this point, but it really can change your life. I got out of the military 5 years ago, and a lot of my peers who got out of the military at the same time are behind in their professional careers because they don't understand the business world. Buffett says I'm a better investor because I'm a business person, and I'm a better business person because I'm an investor. And I completely agree with that. I've done very well in my day job, and I think it's because I see the chessboard better. I understand businesses. And it's really fun. It helps you cut through a lot of the bullshit in the news, and it also makes it actionable. But here's the biggest thing, and if there's nothing else you remember from this video, please take this away. The real money will be made when, and it's a question of when, not if, the market crashes again. And I've been doing this for long enough that I've seen people come and go when the market turns upside down. And that's the biggest thing Flank is getting ready for. Right now, flankers are in the gym, lifting weights, studying businesses, and valuing companies. And when the valuations go lower, you'll have tons of opportunity and you'll be ready to jump in. Remember, when the economic clouds turn dark, we want to go outside and capture the gold that is raining, not with thimbles, but with buckets. Now, I should be clear, there's definitely opportunity still out there, and I'm literally looking for it every day. But with valuations this high, it's really hard to find opportunities. I haven't bought a single stock since April, besides dollar cost averaging in the S&P 500, which I always recommend you do. That's how you build your nest egg. Right now, about 40% of my net worth is dollar cost averaged, and 60% of it is in individual stocks. And my individual stocks have kicked the crap out of the market over the last 10 years. So it is possible to beat the market. I've posted my returns in multiple videos. You can check them out. But anyway, that's enough about Flank. If you want to see what we're all about, then there'll be a link to our website in the description below. It's currently behind a paywall, but we'll be releasing a freemium model in the next month or so. We'd really love your support right now. It would really help out our young startup. But I'm also not going to lie to you. We're still building out a lot of the social and data features that I'm really excited for. They're there right now, but it's a young version of them. But the one thing we invested in early to justify the paywall was we do have a course right now that's available. Other courses go for $300 or $400 on the site. We're offering it for significantly cheaper than that. And in that course, you'll learn how to pick a stock exactly like Warren Buffett does. But one final note before we sign off, the whole Flank team is headed to Omaha this May for Berkshire Hathaway's annual shareholder meeting. And we want to do an event on Friday night. It'll probably just be at a bar because we're still a small community. But if you're planning on going and seeing Warren Buffett speak, let me know. Come say hi in the Discord and I'll give you the information for our meetup. And even if you don't want to meet up, I highly recommend you go to Omaha for this if you can. It's a wonderful event and you'll learn a ton and you'll meet some really, really cool people. Anyway, that's all for this one. If you'd like to check out the last video we made on Palantir, you'll see it over my shoulder right now. We'll see you in the next one.